Welcome back, and today is Sunday. We are on the 25th of September, 10:30 p.m. Singapore time, or 10:30 a.m. Eastern Standard Time. Welcome back. Really excited to join you for today. Quite a quite a interesting Sunday for me because I was serving in the church, and I just tweeted out a picture, the PlayStation that I'm in charge of, and I'm doing my Sunday service. I want to kind of dive inside there and kind of show you guys what it looks like, my little playground, right? So here we go. Let me go to my Twitter account right now, and I hope it's up there. Yep, I think it's I just tweeted out right here. This is my playground. So let me just give you some orientation that's quite interesting. We have our Sunday service within the hall of a school. All right, so this is a very huge school hall with a stage and all that, and we have three main screen here and the two left and right screens, and all this is controlled from the controller right here, and that's my job to make sure everything flows nicely while the pastor is right in the center on the stage preaching. So today's message is really about how we get deeper dive into our worship with the Lord. And I kind of found a really, really great song, and I think we should do that on a more regular basis. Like every Sunday, I dedicate one song and share this with all of you, and you guys can join me in the worship as well, right? So I found one song. You see, my criteria for looking up for a song is not just the song is beautiful and then the music sounds great. No. I'm looking for the worship leader. I'm looking out for the person who takes the lead in singing the song, how passionate this person can be. And that's the reason why, it's really, really important. So I'm going to switch my screen right now over and kind of share with all of you what this song is all about. And then after that, we get into the analysis side of things, okay? So here we go. How many of you are ready to sing song today? let me go and pay my greetings to all of you. Are you ready to join me for a song? All right, that's a first live chat, and I welcome you to contribute in the live chat. Every live stream is a really different experience, right? So let's see what the audience is telling us here today. All right, here we go. And while we are getting ready, I want to pay my greetings to those who just joined us today. Really excited. I'm seeing, Marcus, you are the first. Oh, thank you for joining us. Really appreciate it. I see CK, Catherine, welcome back. Wilson, Jacqueline, Hiram, good to see you. I see Kelvin, Adeline, Isabella, Jeanette, Ryan, CPK. Not really know your full name, but I pay my greetings to you. Christopher, Gisland, Manfred, wow, so many of you joining us. Milton, Eltin, Andy, Kelvin, who else? Liz, you're online as well. Truman, thank you very, very much. All right, and I'm seeing on the other side as well. Who else is on the live chat? Here we go. Wow, quite a large number of you on a Sunday night. I see a message from Pavel. Pavel, my apologies. Maybe you're joining us for the first time, but our live stream is not scripted. If you think that we are scripted, and sometimes there's a mix of things that's happening, so I'm sorry if it didn't meet your expectation. But today I think it's important that I want to get into a session of worship with all of you. So if you don't mind, let me do my thing and welcome you to. Well, I welcome you to join us. If this is not suitable for you, then I just have to say sorry. We're gonna miss you. All right. Okay, so here we go. Back to selecting a song, right? I mean, selecting a song is really, really important for me in identifying the person who takes the lead, the singer. So I found one, and Wow, this is really powerful. It's kind of like a little bit of soprano feel. And if you can join me in the Chinese lyrics, that would be great. It's going to take not that too long. It's only going to take about 5 minutes. And here we go. All right, here we go. Let me set this up and let's check this out. Woo! Glory to the highest in the highest. Wow, this is such a great song.圣洁尊贵全能神，你国度降临这地，荣耀的神大君王，你荣美无人能及。耶稣基督神爱子，全体都向你跪拜。父子圣灵三一神，你宝座存到永远。荣耀尊高神，配得尊崇敬拜，你名超乎万民之上，诸天述说你的荣耀，全场吞担你的手段，荣耀的君王，配得所有赞美，凡有气息都要歌颂，尊贵荣耀，能力权柄，都归荣耀至高真神。荣耀至高神，配得尊崇敬拜，你名超乎万民之上，诸天述说你的荣耀，重重尊耀你的手段，荣耀的君王，配得所有赞美，凡有气息都要歌颂，尊贵荣耀，能力权柄，都归荣耀至高真神。自称至荣，可颂可畏，全能三一神，昔在今在以后永在，天地都颂赞，万膝跪拜，万口承认，耶稣至高神，万王之王，万主之主，佛王到永远。荣耀至高神，配得尊崇敬拜，你名超乎万民之上，诸天述说你的荣耀，众歌传扬你的手段，荣耀的君王，配得所有赞美，凡有气息都要歌颂，尊贵荣耀，能 权柄，都归荣耀至高真神。Wow, what a great song, right? I told you guys. And this is like so amazing. It's not easy to find a song with a kind of a powerful soprano bass voice, and that was led by the leader just now. And there are many familiar faces in the video just now because quite a number of them flew to Singapore recently to join us in a 4 concerts tour here in Singapore, Stream of Praise. So thank you guys for joining me tonight. We have a great kickstart, and I hope that will inspire you for the week. So we're going to get into action. We got to do some serious work on the Sunday night. So let's take a look what the market is telling us. We did a series of Dow Jones analysis, and that's my core foundation. And of course, depends on your flavor. Some of you want to get into the S&P 500 basket of stocks. Some of you want to get into the NASDAQ 100 or call it the triple Q stocks. It depends on what you want. But for me, I think the core foundation, it must be based on the Dow Jones 30 index. All right. So today is a series of that. We're going to dive into S&P 500 because the numbers or indicators we are looking behind S&P 500 will be quite dramatically different from the Dow Jones 30. But the shape, I want to emphasize again, the shape of the chart, somehow they will look similar. Except the one more dramatic will be the NASDAQ 100, all right? So tonight is all about S&P 500. We want to learn something out of this together. And here we go. The great piece of article that will take us to learn more about S&P 500 is found on this article published on the 24th. That was on yesterday. Here we go. Fiat stock market bottom retest is now underway. Wow. So I give you some time to hunt down this article, and I want to make some adjustments to my little bubble right there on the bottom left. I should be on the bottom right. Let me do some adjustment right here, okay? And welcome to all of you just joining us. Really happy to see all of you. Always happy that you can join us for tonight, all right? So let me do some adjustment on that. And here we go. It should be, if I remember, 33. Okay, we are done, and we're going to dive into the work right now. Here we go. All right, so our framework of analysis is we take a look at this article, and then I bring out the key salient points, and then we go to the stock chart, and that's where we really pick out the important key points, all right? So this first part right here is all about, all about the big story of the week. The market is kind of taking a big beating. And right here, all right, we're going to start off with the article right here, S&P 500 threatening June low, all right? So this is the June low. And we want to see not just in 2022, we frame it back to 2021, 2020, and here we go, all right? So I set this up nicely. Bottom left 2020, it must always start from there. And some of you are joining us for the first time, and you might not be used to this, but this is our thinking behind the logic. It must always start off before the pandemic crisis so that we can trace the evolution. What happened before the pandemic? What happened at the start of the pandemic? How the market recovers? And then how the heck, starting from January this year, we got hit left, right, center by inflation. And right now it's testing the June low. All right, so you can see the moment I navigate like this and let my chart, my line kind of lay horizontally across, you will see two very important parts here. First is right this piece, that's what we call the June low. And the second piece is right here. This is the new test that's brokered on Friday, as in 2 days ago. And kind of everybody say, holy moly, we are negative for the year 2022 and possibly we are negative for the year 2021. Now, how do we go about understanding this? So you go right here at the start of 2021 and you join the line there, right? So you can see very clearly this is the start of 2021 and all the way to here. And looks like we have lost all the gains starting from the first day of 2021 until today. The moment the candles here is falling below the start of the 2021, we are in negative territory over the 2 years. We have lost everything. Now, what did we lose to? What is that painful word? This is an important lesson called inflation, all right? And we spoke about this yesterday in yesterday's video. This is the first time many of us in the same generation, we are faced with this really, really dirty word called inflation. And that's the reason why we always cite like inflation is a 40-year-old high record. That means if you look to 40 years ago, that generation is the previous generation that encountered inflation in their lifespan. For us, most of us, I dare say I'm probably older than most of you, but not that old. We are looking at it for the first time, all right? So here we go. Yeah, and this is really, really important. And if we don't look at the history, we will never learn. So let me just, I want to align the expectation. I see so many of you are live chat stream right now. I really appreciate it. But if you guys want to learn something from me, this is something that we got to take it our own time to really understand what's happening in the market. And I I kind of I don't understand. There's one person in the live stream chat. You want to know something out there, but we are not addressing your needs. Then sorry, this is not the right channel for you. All right. So unfortunately, I want to tell it straight as it is. If you want to learn about other markets, go out there and find other channels. This is the channel dedicated to the US stock market. And here we go. Okay, we start from here. And there's a few things I want to bring up before we go back to the article. I think this is really important. I want to set a few line tests. We've gone through this very serious study of Dow Jones 30. Now we're going to bring this into the S&P 500, all right? So we're going to start off from here. This is an important line called a 3,000 line. And I'm going to start from the simple moving average to 200 days, and I draw a line right there. And if I kind of move this line right across, then we hit the 3,000 mark, okay? So this is the next important test, the 3,000 for S&P 500. Now, it's a really mind-boggling because why? If you look at the previous 3,000 test, the market fell. I mean, it fell all the way to 2,000. 3,000 dropped to 2,000, rebounded, and we are kind of escaped out of this massacre in a very short period of time, right? You literally take it as 3 months, all right? Starting of June to starting of March, that's 3 months to be exact in this red box we got out of the woods, all right? So that is the indication I'm going to take in the event the market falls. Now, we do not know what's going to happen this coming week. If it falls like what we've seen back then here, what do we expect? In 3 months, drop, boom, it goes back the same box, all right? So I'm going to show you how we're going to do this, and let me just take away some of the charts here, and we can really focus nicely on it. And here we go. I take the same box. You can see it's the same length and breadth. And then I'm going to move it right here and fit it nicely, okay? Because right now we have just tested the $3,750 line. So if it wants to drop, then jolly well it'll go this way, all right? It'll ting 3,000, ting go back again. This is a potential drop before the next inflation data. So kind of grapple with this. Many of you, when I talk about some key data points and key dates, you kind of are lost in the woods. It's okay because you're very new to investing, all right? For those of our students, you are already well trained. You have jotted down in your calendar. And I'm going to move my dates right across over here, right? So I'm going to open up this very important table. I'm going to keep this there. And I'm going to open up what we did previously. Then you're going to understand why this is so important, all right? So let me do an overlay right here. Check this out. This is really fascinating stuff. Ding. So we say if there's a drop to test the 3,000 mark, then the real key date that we are looking out for is 13th of October. Right now, officially, we are 25th. No other big events coming up other than 13th of October. So we got this data ready. 13th of October, we switch it back to here. Bang. And here we go. Today to 13th of October, we have about 2 weeks' time. That means to say, in this box, if the market wants to go crazy, it will drop. 13th of October will hit. And I trust that. I believe that. And not just me, okay? I think we found a camp of believers that stood on the same ground as us. We believe that inflation has already tanked because, number one, the inflation data is lagging. It is a lagging indicator. We made that mistake last year. The government made the mistake last year, and we all got blindsided by it. We are not going to make the same mistake again, but looks like, there's a new report on Wall Street that the Fed will continue to keep making mistakes. This is very irritating, and if you, I want to give you this challenge. Go and watch the interview by CNBC on Professor Siegel from Wharton, UPenn, University of Pennsylvania, Wharton Business School, all right? He was literally enraged. The word I will use is enraged on live TV. He couldn't believe the stupidity of the current incumbent administration is so stupid that they could keep making mistakes like this. And it's so obvious for him as an economist who trained many great traders. By the way, many great traders on Wall Street are trained under his belt, Professor Siegel. All right, that's why he's always invited back to CNBC Live. He was enraged. He said, this is crazy. And he believes that the recent interest rate hike shouldn't be at 75 basis points. It's too much for the market to take. And that's the reason why we are testing all new data point at this moment. Right? You've seen for yourself right here. This is a new data point falling below 3,750 on the S&P. So he said, he believes that the inflation has already dropped, but the practical side of the inflation dropping, we have to kind of pull out this data, right? Next CPI is 13 October, my mom's birthday. All right, so please take note of that. And if he wants to drop, so be it, let it drop. All right, so be it, let it drop 3,000. Then the data is out on 13th of October, boom. It will go back up on exactly what I'm saying out here on the red box here. Okay, so this is something that I want to alert all of you for this coming week. In fact, 2 weeks, not just 1 week, two weeks that's going to happen in this box here. Depends on how dramatic it is, all right? But again, just as how we did our analysis on the Dow, look at this Friday candle, right? It looks like an arrow shooting up, right? It's no different from our Dow Jones 30 Friday candle is the same. They always look similar between S&P 500, Dow Jones 30, Nasdaq 100. It looks the same, all right? So that's kind of a breather. We covered that on a Saturday's video, and then today we are looking at S&P 500. Okay, so this sets up the framework. So you know about two numbers right now. Number one is our 3750. We have tested it officially. All right. Uh, the next test will be 3,000 based on the pandemic previous drop back then in February, March 2020. So we got these two data points to compare. Now, once we compare it right, very good. We set the stage for deeper analysis. And with that, here we go. All right, I will pick out to you the important paragraphs that we need to study. Only about 17% of S&P 500 stocks are above their 200-day simple moving average line, a fairly extreme reading seen only a few times in the past few years, though at the June index low, this number got down to 10%. All right. What does that mean in this box? It simply says that everybody about that means 100 minus 17, there's 83% of the stocks are above their 200-day simple moving average line. Majority of them are in the red, all right? In fact, June was so bad. In fact, only 10% could stand above their 200-day. And let me go back to 200-day right over here. And I'm going to zoom into 2022, which is around like this, all right? So we present it like this, really nice. And here we go. These are all the stocks below the 200-day simple moving average line, all right? Represented by this line right here. Ding, 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 ding. You can see if the index is below the 200-day simple moving average line, it simply means that S&P 500, we got 500 stocks in the basket. You add up all their stock prices divided by 500, that is your S&P 3750. But as of Friday is 3,700. Okay, so that is what it means. And then I kind of zoom out right here. If back then June we only got 10% of the basket of 500 stocks, that means only 50 stocks above the 200-day simple moving average line, which is June back then. All right, with June we talk about this box there. Okay. And today, on Monday, we're going to enter into this same box. Most of the stocks in S&P 500 again will fall. It may retest the 10%. That means only 90%. That means 10%, only 50 stocks above the 200-day simple moving average line. And 450 stocks will be below, will be in the red. This is a norm, all right? So just mentally be prepared about this. Don't think you are the only one looking at red. The entire index is in the red right now, okay? And with that, we come back to here. So we understand this number about the June 10%, then we go down to here. At 23% off its record high, the S&P 500 is right at the average bear market decline in times when no economic recession has occurred. Under recession scenarios, the typical drop has stretched to 30% with obvious downside overshoots in times of global crisis. That was in 2008. And the generational bubble implosion, that was the dot-com 2000. All right, so, I've gone through this event. I also gone through this event. And today I'm going through with you this inflation event. So 2000 is called a dot-com crash because it was just unrealistic. Anybody could just go and ring the bell, ding ding, with no revenue, no profitability test. They will just become a public company and the stock price will just boom, spike like a few 100%. That was the good old days, all right? Then you came to 2008 financial crisis. Again, the market rallied to an all-time high in 2008 and suddenly it dropped because of over leveraging on the mortgage. That was called a subprime crisis. And there must always be a bubble that lead to a big burst. So 2000, the bubble was about tech stocks, dot-com era. 2008 was about the property market, subprime, boom. And what about now, 2022? This crash, again, is about a bubble of price. It's called the inflation bubble. All right. So we really went through a lot dealing with inflation. And for those of you watching for the first time, I really love this inflation data. We got to always come back and take a look at where's my favorite inflation data right here. And once we see it, we will remember it for life. And here we go. Check this out. All right, so this is our inflation data, and really fascinating stuff because we started off from here at the bottom of 2020, and we kind of blindsided, boom, it just shot up. So the mistakes back then, I mean, the Fed chair and the US government were painting the narrative that inflation is well under control, but it's out of control. Right now, again, they are repeating with the same analysis of the lagging data. And that's the reason why there's one camp out there right now that's telling the Fed they believe the inflation has already dropped. It is not at this high price right now, because if you imagine back then, if this is lagging, that means the inflation has already taken place when? Maybe half of the duration before. I will just move like back half like this, all right? That means the real inflation has already taken place probably about six months before that we already hit a peak inflation. But the data reflected 6 months late. That's what I'm trying to say right here. So the real red box, I move it like half of the width of the box is probably taken, it has already hit the peak. So that's what I'm trying to communicate and articulate to all of you. If you understand, and you can just play with this, just play with this box, right? Right now I fit nicely here. I move it half the width. That means it has already hit the top. Now, if I move it half like this, it also means that the peak, if the peak is at this period of time, then probably right now we are on the path for it to start going down. But the data is lagging. That's the reason why. All decisions are based on the CPI data. They don't look at dynamic data. They look at what is published on the CPI and religiously follow through with the introduction of interest rate hikes. That's what is happening right now, right? So I think there might be a crisscross of that. So maybe it goes like that, all right? So this is low and this is high. And we don't if you try to go scientific about it, there's so many camps out there, you don't even know who is right or wrong. I just go graphic about it. I want to see it as it is, and then I say, okay, what can I infer from it? And I just follow this method, all right? Put it exactly at a spot like this, and we try to see, okay, if inflation comes down, that would be really ideal, but we need to bring it down to 2%. So that is what this article is trying to tell us right here. Okay? Wow. This is really serious stuff, and I hope you guys are still alive. And let me just check again. Sometimes we have the public coming in. They feel that my channel is not meeting their needs. First, they will make a lot of noise on the live stream. After that, they'll disappear. How about the rest of you? Are you all still appearing? Hey! Welcome back. Who is with us today? Okay, waiting for all of you guys. Oops. Wow. Let me pay my greetings. Ryan, please don't become alcoholic this season, okay? I don't know what you're drinking. I don't know what is that. Isabella, thank you for always joining us. Thank you so much. And Jeffrey kicking alive. Liz is still right there, and Adeline listening attentively. I hope you guys can sleep tonight, all right? I want to make sure we end off with really positive vibes. All of you can sleep really well. Thank you, Catherine, for joining us. Emmeline, still here, getting ready for the new school tomorrow, right? So, really, really very encouraging to me that you guys are paying attention. I really appreciate that. But Sundays are more relax. Tomorrow, my meeting will start at 9:30. I got to reach there about 9 o'clock, right? So let me think about this week. Is really busy. This week, by the way, for those of you who are not aware, this is the week of the F1, and many players are in town to party like non-stop crazy. So I look at the list of events. One of my friends is showing me all the different Excel spreadsheet. It's like, wow, there's so much partying in the midst of inflation. and and in the midst of a crypto implosion, they are all here to party like crazy. So yeah, and typically they just move around to be seen and to be heard. I kind of still thinking twice about it. Okay, so we're gonna go back to our article, and I try to get as much insider information to share with all of you, and we're gonna profit from it. Okay. So why is the subheader right now call it the 2 years gone? I share with you, right? We are 2021 and 2022. We are right now in negative territory. If you start at the count of the first week of 2021, we are below that price right now. Okay. So that's why I call it the 2 years gone. And of course, again, Fed apparently poised to err on the side of erring by tripping the economy into a retrenchment. This is what drives Professor Siegel really, really mad. He was really enraged. See why these guys are not, you know, um, maybe there's certain political consideration. Also, it's beyond me to understand. How could the smartest people running the U.S. economy keep making mistakes like this? And it's not that the money managers on Wall Street didn't sound the alarm to them. You have Bill Ackman, you have Professor Siegel, you have Katie Woods, you have many parties coming out, publicly to question the decision by the Fed. And it seems like they are deaf tone, they are not listening. Um, so the market kind of go down into red because the number one concern is about retrenchment. Okay, so is retrenchment real? What's happening right now? And the world has really completely transformed. Let me just share with you, how the world has transformed. I was, looking for like a kind of a after I returned back from Harvard. I was looking for a few important key roles in our company at Spiking, and one of the role is really someone who's expert in the area of software as a service. All right, software as a service to take the lead for sales and marketing. And I say, how do I go about finding someone like this who's been there, done that, done many SaaS companies and help them grow the revenue, automation and all that, right? Then I realized, holy moly, in the world today, the traditional headhunters, what would the traditional headhunters do? You sign on a package with them, they'll just keep sending you a list of resumes, and non-stop. I mean, they will probably send you 3 to 5 resumes, and from that 3 to 5, you never sign up anything, they'll stop sending you, right? So they are also testing their luck with you in a sense. They're not, because they are commission driven. If you don't hire those that they recommend, they don't make money. So they'll try to push you as many resumes as possible. But I discovered there's another new hybrid model in this world of pandemic that we live in today. And the new hybrid model goes this way. I can hire a marketing expert and I probably need about 10 hours per week. Now, what is 10 hours per week? That means if you work for 5 days, 10 divided by 5, the guy is probably working 2 hours per day. Or you can front load on Monday, the guy work 5 hours. And then the remaining 4 days, every day work 1 hour just to make sure, he does some things to put on the system and automate the process. You can hire a top-notch marketing expert for just 10 hours a week. And that is like, within your budget. You can also gauge his performance, his or her performance, and it's fair to both parties. All right. And all this is built in already, whatever commission that you need to pay to the headhunter and all that. So the world has transformed. Now, why I bring this up? Because if you look at this word retrenchment, that is an old word that comes from the old economy. Literally, you cannot be retrenched. Why? Because you can be taking on multiple roles in different companies. And look at the bunch of people at Fiverr to Upwork that, offer their services like 10 hours a week or 20 hours a week or 5 hours a week. And they can take on multiple tasks, right? So retrenchment applies to those who are sucked into the traditional form of employment. And it's a challenge. It's a call to challenge to all of us to rethink, how can you be retrenched? If you can take on 4 or 5 different jobs or gigs in this new, what we call the Fiverr economy, you cannot be retrenched. There's a demand for your services out there. It's just that most people got caught into the traditional mode. I must work 9 to 5. I must lock myself in the traditional company. Every month I collect a fixed salary. That is the traditional thinking. No, I can tell you the world has changed. Even the way we go about hiring has changed. We don't believe in that. What does it mean to hire one guy sitting there 9 to 5? Is he or she delivering the ultimate output for your business? Not necessarily so. Okay? So I want to encourage all of you to think about this. Please do not put yourself into retrenchment phase, because that basically limits your imagination, how your talents or how your contribution can really be serving many, many different interests at the same time. All right. So that's the reason why I think for the US economy to trip into retrenchment, I don't think is. Yeah, I'm not too sure about a ratio. I'm working on a ratio. I'm really thinking aloud. Many of them are already accustomed to work from home. They're also accustomed to take on multiple jobs. So these are the smart ones, all right? It's the more traditional, standard mold of people. Now, so I really got to push this really hard. I shared with you guys my 2 sons went to work for McDonald's, right? and it's like super eye opener for them, and not just for them, for me as well, because they came home and tell me certain information I never heard of. So one of the McDonald's supervisor to one of my two sons, all right, I'm not going to tell you which one, the older one, the younger one. He is alone taking on 3 jobs. Can you imagine a McDonald's supervisor taking on 3 jobs? Number one, morning to afternoon shift is a job as a McDonald's supervisor. Then once he finished that job, he will go on to take on a security guard job in the evening. And then there's a third job. Can't remember what's the third job. There's one more third job the guy that does. Was it Grab or something like that? Right. So this guy, he was the mentor to my son. And my son keep sharing with the family that, wow, this supervisor really very kind to him, very forgiving, very patient with him. And say, wow, I'm so lucky. My first supervisor so kind to me, very very patient with me, right? So we kind of say, wow, that's gratitude, right? And for such a person, he's thinking on his legs. He didn't hold on to one job. Most people say, okay, I work for McDonald's, I'm exhausted, that's it for the day. He continues with security guard. Probably he did a night shift from 5 to 2 a.m. or whatever. And then he got a third job, something to do with Grab, if I remember correctly. He got 3 jobs. This guy can never be retrenched. He will never be out of job because he's actively out there engaging the market. Are you with me right now? I mean, this is a important sharing. Now, if you are thinking, hey, teacher, this guy probably not earning high salary, McDonald's supervisor don't pay that high, security guard, it doesn't pay that high, be a Grab freelancer doesn't pay that high, but you got it all wrong. It's not about getting paid high. It's all about making sure you are not retrenched. That's the key point. So what if you have a high-paying job and you're retrenched and you're sucked into the mode that, oh, I got to make 10,000 per month. And the current economy, no one wants to pay 10,000 a month. So how? You'll be jobless for the next 3 years, 5 years, 10 years? And say, oh, because the market cannot meet my expectation. Wrong. The market is ready to meet your expectation, but in a different model. In a different model. All right? So that's the part I think I really think twice about this word retrenchment in the US, because I think many of the Americans are already kind of in the hybrid economy, taking 2-3 different jobs at the same time. They cannot be retrenched. So did I lose my audience tonight? Let me just see who's still there. Wow, you see, Milton is already saying ready to sleep. Who's still watching? Are you still awake? Holy moly. Okay, I want to hear from who's still alive watching. Wow, we got still quite a number of warriors still awake, and I really appreciate it. And something for you to think about. I spent a lot of time tonight sharing with you the concept of retrenchment. It is very, very difficult to get yourself retrenched if you think about a new model of hiring, of employment in the new economy. All right. So that's the reason why when I play with the metrics, I say, how can the US tip into retrenchment if most of the workers already are working in a hybrid economy? All right. So that is my thinking. And this is very, very real. We are, bringing on board people like that, work 10 hours, work 5 hours, work per project basis. I got many, many such people on my team right now. All right. So just want to share with you. Make sure you don't put yourself in a situation where you get retrenched. Be very realistic about it. Okay. I kind of pushed that point quite deep already, and let's continue with our learning for tonight on the S&P 500. And here we go. 2 years of nowhere. They were also looking at this chart, and this chart, how we interpret goes this way, all right? If you look at this era, that was the Donald Trump era, all right? Donald Trump was on the era 2000. Kind of my brain not working today. 2024, 2020. All right, 2020 November he was elected. Sorry. 2020 November, Joe Biden was elected. He started his job in 2021. All right. So if you look at the Donald Trump era, so 21 minus 4 is 17. The start of January 17, 18, 19, 20, and until end of 2020. So full year 17, 18, 19, 20. That 4 years, that red box is the Donald Trump era. All right, so let's put it out here. Donald Trump era, right? So if that is the Donald Trump era, was it the best era? No, not exactly. In fact, during that time, market was moving sideways. Only in the tail end when he stepped into the phase 1 of the US-China trade deal, then the market start to pick up at this part here, right? So if you look at it, but of course back then we are not dealing with like recession, inflation, and all that. It's more about US-China trade tensions. So this kind of gone already. The era is already over. Then from here, at the start of the pandemic, right here, you can see how the market just went up because of pent-up demand. And that's the reason why, if we've been hit left, right, center right now on inflation, there's a big pent-up to rally the market. This is what I'm trying to articulate to all of you, and I hope you all catch the drift, all right? Once you're beaten left, right, center, and you stay on, there will become a moment where the silver lining will start to show up. And that's what we are waiting for, okay? So we've gone through this one, and then we push it further, and the rest is like we've gone through the metrics just now at the start. Sentiment too negative, and that's where we are right now. We are on extreme negative, right? So first, let's look at the 35-year history. What are they talking about? It's an unscientific survey and small sample size, but the number of bearish respondents to the American Association of Individual Investors weekly poll popped above 60% for the 5th time in its 35-year history. The 4 other times came in pairs, 2 in 1990, 2 in 2008, during the bear market climax phase, and the first 60% reading was not at a decisive market low, though a year after each of them, stocks were higher. Woohoo! 1 year after this negative reading came out, it's trying to tell us the stock markets went higher. All right, so this is the shine of the times. And let's continue, push it. All this is good to know, but not that important. And I want to bring to you all the most important paragraph coming out here. The ending part. All right, so let me just put it up here. Yet, after this coming week, seasonal factors start to improve fast through election day. When is the midterm election? 8th of November. Gasoline futures are at an 8-month low. The 2-year Treasury yield looks overstretched and due for a pause. And peak inflation is a process deferred but not yet denied. We'll see how this all plays into the fiat market retest now underway. All right? So that is a good understanding for us to know about S&P 500, and maybe, this coming week and next week, I will touch on the NASDAQ 100. we look at individual tech stocks. But I think this is good enough for us to set up the test for this week. And I will just show you one idea that I'm working on, which, is kind of aligned with what we are building up a great products. So there's a few more important products that we are rolling out from our company Spiking. Our engineers are really working non-stop action. I can tell you, I'm so grateful to have them on board with me. And they caught the vision. The vision is this. Just as I share with all of you, and some of you are very new to us, I want to share with you the vision of the work that we are doing here at Spiking. Number one, the all overarching vision is we want to impart wisdom. The keyword for our business is wisdom. If we cannot deliver wisdom through our data, through our analysis, through our strategy, through our methodology, I think we are wasting time with each other. And wisdom can only be derived if we build our business or Spiking on a very dynamic basis. Whatever the market throws at us, how do we respond? We can respond in a few ways. Number one, in the way we change and tweak our products so that we are matching the needs of the market. Like current market, let me tell you, we are pushing the data really, really hard to identify the next really sniper kind of a kill it all stock. We're pushing on that, all right? We're also working on a product whereby we can 100% automate the entire process of investing and trading so that we free up our time, focus on getting the wisdom from the market. So these are some of the things we are working on. The wisdom also depends on how we ride through the storm. You see, the few ways to describe wisdom, number one, you can call it going through the baptism of fire. And you really, rage with passion and say, yeah, go for it. Or you can go through what I call the valley of the shadow of death. Almost die already, but you survived and you resurrected. Right? So there must be so much wisdom that birth out of whether you are, baptism of fire or valley of the shadow of death. There must be so much wisdom birth out of it, provided we stay on the game. Not sitting as a third party out there, just looking, I got no feeling about it. Sorry, you got no feeling, got no wisdom. Very simple one. Wisdom is birthed out of you putting yourself into the trench, not as a bystander. And of course, we can debate until the cows go home. Doesn't mean you have to agree with me, but I think that is the approach I take. The approach I feel, which is very, very lacking. And I want to work on that. All right. So before we end off tonight, 3 ideas to share with you. All right. And this is coming out from our data, and I want to show all of you right now. Here we go. This is from our Spiking Wealth Management System. And, I kind of pull out 3 very important traits in 3 very different ways. All right. Let me just explain to you what I meant by 3 very different ways. All right. So let me stage it. All right. So this is really, really nice right now. 3 months and just a little bit more up here. Okay, nice. Okay. So we got 3 guys here. 3 different scenarios. And, out of the 3, I'll fire 1, maybe fire 2, maybe fire 3. If you are interested, you can always join me in our Don't Stop Believing Trade notification, which is found right here. Bang! All you need to do is scan this QR code, or you can visit us, spi.ke/help, and then you will know which one I'm really, really, really playing on, all right? So a quick shout out before I go on back to here. So we got 3 scenarios right here, okay? Very interesting for your consideration. Number 1, let me start with the bottom one. Warren Buffett bought this stock between 30th August 2021 to 30th August 2022, over a 1 year span. Look at the date range, is very important, all right? And again, the guy above him also bought within this date range, 6 September 2021 to 6 September 2022. And the guy above here between 11 September 2021 to 11 September 2022. That means sometimes, the filings are shown on a specific date, sometimes shown on a quarterly date, sometimes shown on the annual date. Depends on how you manipulate the data, all right? And of course, this is a very, very complex business of what we call mandatory filings to the Securities Exchange Commission. But granted, we have three scenarios right here. This bottom one, Warren Buffett put in 2.6. Second one put in 1.6 billion. And the first one kind of put in 1.1 billion. All these are huge, huge bets. I'm only interested in big bets, all right? Nobody put in $1 billion into a single stock unless he or she knows what the hell is happening. And the business of due diligence is very complex. Everybody got different standards of due diligence. Some take it easy, some like so anal, every metric they want to chase. So it doesn't matter. What matters is, end of the day, all these three trades pass the due diligence. The question you have to ask is, which one do you believe in? Right? So we also shown you the average price. For example, this average price is 22.22. This average price is 80.99. This average price is 50.76. So if I show you a data like this, what would you chase? Would you chase the guy with the price, the current market price is below the average price? Now, that could be one method that you want to deploy. Say, oh, I buy cheap. Cheap is good. Or you can go on another way to look at the traditional way, fundamental, insider, alerts, technical analysis. That's our spiking method, which we define it as fiat. Or you can also look for momentum in the way they go about purchasing the stocks. There are many ways to look at this. Many, many ways, I can tell you. All right. So tonight, I want to leave you with these three trades. The start of the week really, really positive. These are billion-dollar trades. When's the date of exact transaction? It happened over a span of 1 year. We can't tell you whether is it the first quarter, the first, second, third, fourth quarter of that year. We just follow according to the filings, all right? And then you take a look. Out of the three, two of them are 10% owner, major shareholder. One of them is a founder and previous co-founder of Facebook. What is your flavor of the day? So that's something you need to think about. And really, really important, we can have all the data at the end of the day coming back to what I shared with you. It boils down to us acquiring wisdom. That is Spiking's business. Our business is in the business of wisdom. If we cannot deliver wisdom in our data, in our products, in our teaching, in our strategy, in our method, we have failed. But wisdom cannot be granted if you walk through this journey every step. So keep walking. Thank you, everyone, for joining me here tonight. I really appreciate it. And I hope that you start off the week really, really strong. Don't get affected by what happened over the past few weeks. Every fresh week is a fresh week. And every week, there's something to work on. Now, one of the things that I'm very, very hard on myself is I kind of, over time, I've had backlogs. Backlogs are things I needed to do, but I didn't do. And sometimes I pray to God and say, God, how the heck I end up with quite a number of backlogs that supposed to do but never do? There must be a reason. Is it because I'm distracted, or is it because somehow my eyes, didn't look at them and I focus on other things? There must be a reason, right? So my prayer goes this way. which recently kind of reminded me I need to change my Facebook profile. I'm trying to log into my Facebook right now and see if I can get into my Facebook. Here we go, logging in. Ding, ding. So I got 2 Facebook profile. Oh my gosh. They don't let me log in. I entered old password. Okay, let me see. I think I got to enter on another browser. Okay, hold on a minute. Here we go. Did they lock me out of Facebook? Okay. So this is my Facebook profile, my personal one, all right? So over here, I recently changed my cover image to this one. And I think it's important to kind of going back to the idea of wisdom. Study this book of instruction continually, meditate on it day and night, so you'll be sure to obey everything written in it. Only then will you prosper and succeed in all you do. Okay? So it started off like this, but I think I kind of messed up on. Oh, okay, I gotta adjust it like that. Hold on a minute. How to adjust this? Okay, I think go something like this. And then ding, refresh. So this is how I want to end off the next session. Go for it this week. Start afresh. Don't be too hard on yourself. There must be a reason certain things you didn't do. There also must be a reason certain things you start to focus on. No right or wrong, but just be guided by the peace that God has given us. I wish you well, and may God bless you. Good night, everybody. See you again tomorrow. Goodbye.